This is the 2015 Examcraft Tabular 100 mark question. Um, Couple of little tricky things in this one that probably aren't in any of the other questions, since we're sort of used to it from the mocks. They tend to throw in the newer ticket items. So anyway, I've got it ruled out the start of the year, so I'm just going to start putting in my numbers before we get going. Obviously, there might be a working or two even at this point, but we'll see. So land and buildings is 210, so we just put that in. Remember, depreciations go in as minuses, so minus 18,000, and we don't worry about values. Vehicles is 56. The depreciation is 15. Investments, which I think we probably haven't seen before, is 50,000. Just goes in. Stock 34. Now, debtors less bad debt provision is 28.5. So remember, you have to show that like it's a question one. You show them separately, the debtors and the bad debt provision. So it's 28.5 is 95 is 28 yeah, 28,500 is 95%. So we're going to divide by 95 and multiply by 100. And that gives you the full amount, so it should be 30,000. It's normally the next full number up, which means the bad debt provision must have been 1,500. So 30,000 minus 1,500 is 28,500. The rent prepaid then is 1,500. Okay. Down at the bottom are liabilities. Creditors 37,850. VAT is 41. Bank, which is bank overdraft, 27,250. Wages due is 920. 20-year loan again, that's new. Just be aware there's probably going to be a couple of things to do with that. 80,000. The share capitals then, the authorised doesn't go in. The issued is 150. The share premium is 15,000, and the profit loss 31,880. Okay, so we add up our assets and liabilities, and every time from here on in there, they have to be the same. They'll definitely be the same here. Or they should be anyway. Unless I've left something out. Yeah, so 347,500. Okay, we just work through each working then. They're all individual questions from here on in as changes to the balance sheet. So first one is January, so we label our month January. And we'll see what comes, what's asked. So it says the 1st of January, they're revaluing land and buildings to 250. So this 210 has to go up to 250. So 210 up to 250 is an extra 40,000. When you revalue land and buildings, depreciation goes to 0. So minus 18,000 to 0 is 18,000. So that gives you 58,000. So we know this ourselves. Our revaluation reserve is 58,000 here. So the top will add up to 58,000, the assets, and the liabilities will add up to 58,000 as well. Now, this here, the land is at 80,000, and the depreciation charge on buildings for the year is 2% of book value. I would just make a note and maybe highlight that 80,000, circle it, and bring it down to this December working. We're going to do our depreciations at the end of the year. Okay, just remember that. You could do it now if you wanted. I certainly would. I would be holding off until the end of the year. So that's January. February, that's probably the most common one. You buy a new business, and how do we deal with that? So it's just the creation of goodwill. So on the 1st of February, Garcia purchased an adjoining business made up of the following: buildings 90,000. So buildings go up by 90,000. Vehicles go up by 16,000. Creditors are 42.5, so down to creditors, and they'll go up by 42,500. And stock is 2,500. So how did he pay for it? he granted the seller 60,000 shares, so issued shares are 60,000, and there was a share premium of 10% per share, 10 cents per share. So 60,000, 10% of that is 6,000. So if we add up the bottom, 66, 60 plus 6 plus 42.5 would be 108,500. The top would be less than that anyway. So we've got 90,000, 16 is 106, and another 25 is 108,500. So there is no goodwill in this question. We paid for the business what it was worth. Okay, which is very rare. Never seen that before. Normally, we compare the assets to the liabilities. The assets will be less than the liabilities. And the difference between the two numbers is the goodwill. This question, there is no goodwill. They've paid exactly what the business is worth, 108,500. Okay, so again, that's new. I'd say that was a mistake when they made the test. Merch then. Okay, sold goods on credit for 4,767. This includes VAT at 13.5% and a markup of costs and 20%. So there's a little bit of working involved here. What we need to know is that when we sell goods on credit, we sell goods to debtors, and they always owe us the full amount of money back. So they owe us this 6,767 back. Sorry, 4,767. So the debtors is going up by that. But the stock isn't worth 4,767. The stock is worth what you bought for it, and the VAT is separate. And then the markup is the profit. So we're going to have to work backwards. So the first thing we do, this is a little working, we take that 4,767, and 4,767 is equal to 113.5%. The 100% being the stock price, and the selling price. Sorry, this 100% being the VAT exclusive amount, and the 13.5% being the VAT. So the two together are 113.5. So we're going to divide it by 113.5 and multiply by 100. That's 4,200. So that 4,200 is the selling price in reality. So we sold the goods for 4,200 plus VAT of 567. So the VAT has to be 567. Okay, so when we sell goods, that person owes us the VAT. So 567 goes up. All right, so our VAT liability is going up by 567 euros. Now, what happens to our stock then? So our stock is going down by the cost price. So the cost price we have to work out. So that's our next job. So we're going to take that. That's our selling price. And we're going to work that back now to the cost price. So the cost price is going to be 4,200. The markup is 20%. So we're going to divide it by 120 and multiply by 100. Which is 3,500. So if we sold goods that cost 3,500 and we sold them for 4,200 because you ignore the VAT, right? That means we made a profit of 700 euros. So there's a profit. So profit loss is 700 euros. 35 plus 400 plus 700 brings you up to the 4,200. So what's happened to stock? Well, our stock has gone down by 3,500. Now, hopefully, when I do that sum, I get 1267 both ways, and I do. Okay, so just on that one again, we work back. So debtors goes up by the amount that's owed, 4767. Work then back to the cost price, so as we can work out the VAT. So the VAT is, if you divide by the 113.5 multiplied by 100, that gets you to 42. So that gives you the selling price without VAT. So therefore the VAT has to be 567. When you sell goods, VAT as a liability goes up. Every time you sell goods, you owe VAT to the tax office. So then work backwards from the 4,200 to find the cost price. So 4,200 divided by 120 multiplied by 100 gives you 3,500, which means you must have made a profit of 700. 3,005 up to 42 is 700. And then stock goes down by the cost price, 3,500, and it should balance from there. Okay. That's fairly common now, that question. So just be aware of that one. We should have seen it in some of the other ones we've done. Okay, April. It says paid all outstanding wages on the 31st of the 12th, 2013 by check. So there should be wages due here. So there was. So there's wages due of 920. We've paid them, so they're no longer due. And then what's happened? Our bank overdraft. Well, our bank overdraft has got to have gone up by 920 euros. Okay, so if you owe the bank 900, you owe the bank an extra 920 euros, but you no longer owe the wages. So if we then balance the top, we'll have 0, and balance the bottom, we'll have 0. Okay, so that's April done. Nice and easy, I hope. Now, there's another part to April, sorry, which I didn't see. It was decided to amend the bad debt provision to 4% of debtors. So, at the moment, debtors is I've managed to lose debtors there somewhere. Sorry. Oh God, what have I done here? Okay, so as we started, debtors were 30,000, and then there's another 4,767. So we have to find 4% of that. So again, we'll do it as a working. 4% of 34,767. So the new BDP is 4% of 34,767. Which is 139068. Now, there's absolutely no way I'm working off 139068. So we'll just work off 1390, I think. And we leave out the 0.68. Again, you won't have that in a. You certainly won't have that in a leaving cert question. So the BDP is going from 1500 down to 1390. So the difference between those two is 1390 minus 1500 is 110 euros. So bad debt provision has gone down by 110 euros. What happens when there's a reduction in bad debt provision? It goes into your other operating income as a plus. So 110 into your profit and loss there. So that should have been a plus 110, obviously, there. So 110 and 110, and we're right now. Now, so that was April. So May. We received 100,000 for the issue of the remaining shares. So your bank overdraft has gone down by 100,000. All right. Um, now, what's happened to your shares? Well, your shares have gone from 60, from 150 up to plus 60, which is 210. And your remaining share capital is 90,000. So you have an authorized share capital of 300,000. So if we've issued 150 and another 60, that's 210. 210 up to 300,000, which is the most you can issue, is 90,000. So your issued shares are 90,000. So if you've got 100,000 for shares that had a par value of 90,000, well, then there's a share premium of 10,000 euros. Okay, so now when you balance it, that would be sorry, I'm doing the wrong thing. When we balance it, that'll be 0 and 0. Okay, that's the May one done. Straightforward enough, I hope. June. So what's happened? Paid by check rent for the year ending 30th of the 4th, 2015, 4,800. So you paid your rent. So there's a rent prepaid. So we're going to put it in rent here, right? So we've paid the rent. So therefore, our bank overdraft has gone up by 4,800. And our rent prepaid will also have gone up by 4,800. Now we're going to deal with that at the end of the year. Okay, so we'll deal with the prepaid element at the end of the year. We'll come back to it. All right, the second part, and I'm going to show it separately here. You don't have to do this, but I'll just June 2. But you can do that. Okay. So the second part is you've got a credit transfer in respect of the annual investment income from investments of 2,000. So you've got your investment income. So your bank overdraft will go down by 2,000. Okay. And then investment income, what's that do to your profit? It increases your profit. So think about where that would be in a trading profit and loss account. Okay, and that'll fix those. So that's those two done. Now we'll be coming back to that first June element at some stage. You can put those two, and also you can put those two June ones together. July. Now, so goods sold in March for 681. Let's go back to March. That's your look. That's your VAT at 13.5 and markup will cost at 20%. So those two numbers still apply. So just remember that. So goods sold in March for 681, including VAT returned, owing to a delay in returning these goods, a credit note with 650 was issued. Now, what I'm going to do is I'm just going to work out the VAT and the profit, the VAT and the cost price again. So 681 again divided by 113.5 and multiplied by 100. That's going to give us the cost price, or that'll give us the VAT exclusive price. Which is 600, and I'm going to work backwards then the cost price, but that means the VAT is 81. So they're the two numbers that are important. The cost price then is 600 divided by 120 multiplied by 100. So which is 500. So just with those numbers, bear in mind what's happened. So first and foremost, owing to a delay in returning the goods, a credit note of 650 was issued. So he only owes us 650 less. So debtors goes down by 650. Right, what happens to stock? Stock goes back up by 500. It's always going to be the same things, that the same ones that we used in March, except the opposite way. If I can see this in March, I can. So see the way in March when we sold the goods, stock went down. Well, when the return stock goes up. When we sold goods in March, debtors went up. When the returned debtors goes down. What's going to happen? VAT. So let's have a look at in VAT in March. VAT went up. So when the goods are returned, VAT's going to go back down. If you go back and check what the VAT was, it was €81. So €81 there. Now, the profit then is going to be the balancing number. So if we've got plus 500 minus 650, that's minus 50, or sorry, minus 150. If we've minus 81 here, well then the profit and loss is going to be minus 69 here, because that'll bring you up to the minus 150. So your profit and loss, if we just treat it as a balancing number in that case, it's easier to work out the thing. So if you just check the in March, it's the exact same numbers, or it's the exact same thing. So stock, debtors, VAT and profit and loss. Stock, debtors, VAT and profit and loss, and it'll always be the signs will be the opposite way around. Okay, so when goods are returned, same things, just signs the opposite way around. September then. So what's happened? We received a check from 960 from a debtor and discounted out of 40. So the check's 960. So bank overdraft's gone down by 960. And that's to pay off a debt. And we're giving them a discount of 40. So 960 represents a debt of 1,000. So debtors goes down by 1,000. So we've received the check for 960. So what have we given them? We've given them a discount of €40. So discount, if we give them a discount allowed is €40. So that reduces your profit. So if you think discount allowed will be a selling expense, you've got 1,000 then as your total for both of them. So that's September. October, a payment of 800 was received from a debtor. So again, what's happened? Bank overdraft has to go down by 800. This represents 25% of the original debt, and the debtor has undertaken to pay the remainder in February. So the rest of the debt, the 75%, is going to increase debtors, and the full amount, of course, is bad debt recovered. So 800 divided by 25 multiplied by 100. Bad debt recovered is 3,200. So the full amount is bad debt recovered. Bad debt recovered goes in other operating income, so that would increase your profit. So debtors goes up by the difference, which is 2,400, and that will then balance at 2,400. November then. Garcia Limited decided to make a down payment on the 20-year loan by paying 20,000 off 20,000. So what's happening? The loan is going to go down by €20,000. How did he do it? So we either did it by bank or some other way. So to do this, he sold off investments. So investments go down by 20,000 euros. And that's it. Nothing else to do there. And then December. A vehicle which cost 15,000 was traded in against a new vehicle costing 26. So vehicles at cost are going up by 11,000. A trade-in allowance is given on the old vehicle of 8,000. So that means you had to write a check for 26,000 minus 8,000, which is 18,000. So your bank overdraft goes up by 18,000. Depreciation charge on the old van on disposal was 2.7. So your accumulated depreciation is going down by 2.7. Sorry, it's going up by 2.7. You're getting rid of it, so you don't have it anymore. So that's 13.7 versus 18,000. Now you can work this out a couple of ways. The balancing figure could be profit and loss. So 13.7 compared to 18,000 is a loss of, I don't know what that is, 13.7, 4,300. Or you could look at the vehicles. Vehicles cost 15,000. The depreciation was 2.7, so its valuation was 12,300. If you compare 12,300 to 8,000, that's going to be a difference of 4,300. So if we put in our loss of 4,300 here, now at that point I'm going to balance it. 13.7, 13.7. Now, it tells me there's an annual charge for depreciation on motor vehicles of 2,800. So I'm going to actually put in the 2,800 here. So 2,700, and another 2,800 there. That gives you depreciation of 100. What does depreciation do? It reduces your your profit. So that'll go down by 10,700. So that's my first December one. Now I'm going to go back up and I'm going to keep working on the depreciations in this one here. So there was depreciation on the buildings, and it's 2% of book value. So if I go all the way back to my buildings, they've been revalued in January. So up to 250, but there's depreciation, there's land of 80,000. So it's going to be 2% of 250 minus 80. Which is 170. Now that's at the first of the first, so you have that for a full year. And then you, in the second month, you bought buildings costing 9,000, so 90,000, so 2% of 90,000 by 11/12. You don't have them for a full year. That's 1,650. So if I add them together, the depreciation is 5,050. Okay, so depreciation of buildings is 5,050. So if I go back up here, my accumulated depreciation of buildings is another minus 5,050, which I'll have to put in down here. So another minus 5,050. So it's 12,150 is my total depreciation. So I would have to do that in 2 or 3 separate workings to show each step, but it might be worthwhile looking back over that. Now the second December working is to do with my rent prepaid. So, do you remember back in June? Sorry, in June you paid by check rent for the year end the 30th of the 4th, and that was 4,800. So 4 months of that in this question are, so 4/12 of the 4,800 is prepaid. So 1,600 is prepaid. So I'm going to put that in my total. All right. So basically at the end of the year, I've got 1,600 prepaid. At the start of the year, I had 1,500 prepaid. So 1,500 plus 4,8 is 7,300. So 7,300 down to 1,600 is 4,700. So 1,500 plus 4,8 is what's that? 6,300. 6,300 minus 1,600 is 4,700. So to get from 6,300 to 1,600, I have to take away 4,700. Okay, so that's in effect my rent for my profit and loss. So it's no longer prepaid, it gets moved over to profit and loss, and we get 4,700 in both months. So that's it done. We'll just total off all of our columns, and they should, so the battery doesn't go. They should all be equal. By about 2,077. Okay, so that's that one done. Hopefully that works out all right for you. There's nothing too difficult in it, really. No, I don't think there's anything really bar the investment in the loan that we haven't seen before. All right, lads, we'll see you back in class.